Hi, this is Kerry Artak with Wicked Stocks, bringing you your daily Apple report for Wednesday, January 3rd, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. Big picture, we'll work our way into the day itself. This is a weekly bar chart. Just a reminder, I could go all the way back to May to show a long-term buy signal above what is now mid-160s long-term support. And we also retested this area just a few months ago following the most recent testing of that in October. We rallied nicely, closed above this descending channel top. That is this week at 180.87, 4-star support. That remains a 2 to 3, 3 to 5 week objective following the settlement last week below really a combination channel bottom and speed line. We closed below the channel bottom first. It took a couple more days to close below the speed line. They're both convergent right now in the 196 handle. It was this combination sell signal that played out almost a week ago, the two of them combined, that we then anticipated. A 3 to 5 week sell signal is now turning into 3 to 5 days. 181.59, I think that's a Fibonacci level. Actually, we only have it as a minor point. We are focusing on 180.87, the former channel top on the on the weekly chart. We also, of course, have 180.25. So it really is 180 handle support that is in reach, possibly today, given the heightened volatility and the big sell-off that occurred on Tuesday. So 188.90, if tested today, this former channel bottom, able to contain session strength. And below which, I will say that over the next 3 to 5 days, we should fall into the 180 handle long-term support. 180.87 combined with its same formation on the daily chart at 180.25, able to absorb selling through January and even through the first quarter. And from here, we can rally up over the next, well, the timing of that is next to impossible, but I will say by some point in 2024, we should push into this 234.54 region. So the low 180s, solid bottom picking territory as we move through January into February trade. And we can come off of this area nicely, and it is potentially in reach this week, holding below, where is that chart again? The 188.90 channel bottom. So 188.90 able to contain session strength, and below which we can, by the end of this week, over the next few days, fall into the low 180s. We do have these minor points inside of here, all carefully chosen for their ability to contain intraday activity, particularly 186.65 upside and 182.65 downside. Aggressive day traders can have at those intraday pivot points. If we break 182.65 today, we just might test 180.87 today, where we could bottom out into February trade and quite possibly into the second quarter. Now for the upside, I'll just merely say that closing above 188.90 should yield 193.88 within, could be anywhere from 1 to 3 days. And while we still are using 196.30 to 196.37 as our sell signal support, now resistance well above the market, that's going to change over time. We do like to still show you the graphics to remind you of the sell signal. But in terms of upward trade recovery, I'll just get back to this chart, and that is to say that if we close above 188.90, 193.80 likely within 1 to 3 days, where we could top out on a daily, possibly weekly basis. Over the next few days, it is likely that we will bump this 193.88 to a 3-star resistance, able to contain buying into next week, and we can fall off again from there. And if settled above 193.88, does indicate, I'm going to say, a good January low. This low here in the 183 handle, I think, will be good through the rest of the month if we can close above 193.88. And that should pivot us northward into the low 200s within several weeks of closing above 193.88. So, I want to tell you to kind of ignore the 3-star status up here for 196. I've kept it just to continue reminding you of the sell signal that played out over the last 3 or 4 days, but it will be this 193.88 speed line. And one of the reasons we're just reluctant to commit to it just yet is we do need to feel comfortable where the low is. This speed line is based in part on Tuesday's low. So yes, if we trade higher from here, if we close above 188.90, this 193.88 descending red speed line will become a 3-star resistance, a pivot point into later January, able to contain buying through next week. From here, we could fall back into the low 180s within 2 to 3 weeks. And if we close above 193.88, good January low, we should push into the low 200s. I can already see if you can form a trend line off this low against this low, and you put a channel top coming up, that would be our objective. It would be around 205 and climbing, FYI. I'm just kind of giving, but once again, I don't want to commit to these formations until we actually see the market rally out of here. And rally is the big challenging word right now for Apple. I'm talking short term. I'm talking the next week or two. I do think that the low 180s could form a nice long-term low as we move into the second quarter. And for, day traders, and 3 to 5 day swing traders, you can have a go at 188.90 in terms of the short sale, anticipating the low 180s. Once again, if we close above 188.90, 193.88 and dropping daily, likely within 1 to 3 days, where we will have bumped it up to a 3-star resistance by then, able to contain buying through next week. Once tested, we could fall back into the lower 180s within 2 to 3 weeks. And if we close above 193.88, I see that as a good January low, bullish continuation then expected into low 200s. And of course, the convergence of these formations will probably be able to contain daily buying pressures on the way up. But once again, I don't want to dismiss the idea that closing above 193.88 over the next week or so, this descending speed line, would be a meaningful buy signal event through the rest of January. I'm going to leave it at that. Please click like, share, subscribe. Be back tomorrow with Thursday's Apple report. And you have a good evening.